Thank you for joining us for Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. Welcome, everybody. My name is Andrew Farrell. I am Patelco's financial well-being educator. And today we are going to be talking about something in the financial space that is very fast growing, also very, I think, polarizing for a lot of people, and that is buy now, pay later. So just in case anyone is unfamiliar, buy now, pay later is a short-term, usually interest-free financing option that will allow consumers to make purchases immediately and then pay for them in installments. A lot of times it's like 4 installments over 8 weeks or something kind of a short term like that. And popular companies that offer buy now, pay later are Affirm, Klarna, and Afterpay. So if you see those names floating around, those are the main culprit in the buy now, pay later space. But before we get into the whole buy now, pay later universe, I want to introduce our 2 guests today. So we are joined in the podcast studio with Danielle Lowe Robinson. She is a certified financial specialist. She has probably heard about buy now, pay later from a lot of the members that she helps. I'm sure she knows a lot from the member perspective on that side of things. And we are also joined by Alok Bakshi. He is our VP of Card and Direct Consumer Lending. Been with Patelco for almost 5 years, I believe, and he is kind of our industry expert in buy now, pay later. So Danielle, Alok, welcome to the podcast. Thank you for joining me today.
Thank you for having us.
Yeah.
Thank you,
Exciting.
Andrew.
Of course, of course. So, Alok, we'll start with you. If you could just give us a little bit of the broad strokes of your history in finance. I saw in looking at your LinkedIn, been with Patelco for about 5 years, but you have been doing lending and cards things in many other financial institutions before this. If you can just talk a little bit about your history in the financial space and what you currently do with Patelco.
Absolutely. My pleasure. Once again, thanks for having us here, Andrew. I've spent over 18 years in financial services, working across 4 different time zones with responsibilities in almost everything from credit risk and econometrics to marketing, analytics, and product management. So before joining Patelco, you said about almost 5 years ago. So I worked at HSBC before that, at Capital One, and at Wells Fargo. Now, for some of our listeners who are looking for some insights on how to choose a career, I'll share some from my background. I did my bachelor's in industrial engineering, and then I mastered in business administration. Before stepping into banking in 2007, I worked in the automobile industry and IT services industries.
Wow.
Reflecting back on my career, I did not know what kind of work I really like and would want to do. So I just kept trying, honestly, a variety of roles.
That's the way to do it.
Ended up liking almost everything that I tried and I was doing. So
It's a good problem to have.
Absolutely. So just wanted to learn new things and feel more accomplished.
For sure.
I also believe that I got lucky to work with some of the finest, I would say, most inspiring and hardworking individuals. And I think they have played a much bigger role in shaping my path in my career for me to choose like what work I'm good at and what I should be continuing to do. So look forward to sharing here my insights on buy now, pay later as we get into this. But I just want to share that background for some of our listeners.
Thank you so much, Alok. And Danielle, if you could just quickly reintroduce yourself. I know you were just here a couple months ago, but talk a little bit about what you do with Patelco.
So what I do with Patelco, I'm a certified financial specialist. So I basically assist members on their financial journey, whether it comes with budgeting, saving, debt payoff plans, also with credit building. So those are like the 4 major things that we work on. So with that, I get the opportunity to see some that are starting out with their budget, or maybe they have to rebuild their credit. So I'm working on them with coming back, getting back on track with things. Sometimes it could be where they're on track as far as having the finances, right? Having the money or the income, maybe I should say it that way, but they still need to learn where to tell it to go, right? So it's not always someone is struggling, but sometimes it is where on the other end where I do have the money, but I just don't know what to tell it to do. So definitely have the opportunity to do that. Enjoy that opportunity. Also as a CFS or an ECFS now, an enterprise certified financial specialist is a CFS still, a certified specialist, but who covers a region, so multiple branches in a region. ECFS, I get to actually go out into the public, so I do financial seminars at different schools, at different work sites, shelters, and things like that. So I've had the opportunity to teach on that outside. And then we also not only work with the public, but just having that one-on-one time also with non-members too. So it's not only about members. Non-members can take part into the class as well, or into
That's
the coaching
awesome.
sessions as well. So if you need help with savings or credit building or debt payoff plans, we're definitely here, and even saving. So consistent savings is key. So yes, you'll hear people say, oh yeah, I do save, but how often?
Right.
So is it like triggered where every time my paycheck comes in, like I have something going emergency, I have something going to long term, or is it just every now and then I'll throw something in the savings? So we help you build consistent savings.
Beautiful. I love that. Yeah, so we are, like I said, joined by Danielle and Alok. Danielle, I know, has, like you said, a lot of firsthand experience with our members and with our communities, and kind of can represent, I think, what the perspective is of a consumer or someone who's utilizing buy now, pay later. Whereas Alok, we have a lot of kind of industry knowledge behind that. So I'm really excited to hear both your guys' takes on this as far as where we are right now with buy now, pay later. But before we get into that, I just kind of want to summarize some of the appeal versus the controversy, I guess if you want to call it that, around buy now, pay later right now. So I have some statistics that I found from Capital One Shopping. Buy now, pay later usership in the U.S. increased about 50% in the last 3 years, so it is growing pretty quickly. I saw that 96.3 million Americans are projected to use buy now, pay later in 2026, which is up from 91.5 in 2025 and about 86 million in 2024. So we're getting about 5 million more users just in the United States per year with this buy now, pay later financing option. I think some of the main appeals or some of the main draws behind buy now, pay later, first is that it is super easy to use. It's frictionless checkout. So the buy now, pay later services, the, Affirm, Klarna, Afterpay, a lot of time are embedded into the online checkout process. So when you have things in your cart and you're going to pay, the option is right there. You just click the box that says make 8, or 4 whatever easy interest payments or interest-free payments, and it's super easy to use that way. Also, the fact that it is a lot of times interest-free, I think a lot of people look at that as a better option than putting things on credit cards because they look at it as a more financially sound decision to make. And there's also really high approval ratings with buy now, pay later as well. The most recent data I saw for this is that in 2023, also from Capital One Shopping, there was a 79% approval rating for buy now, pay later financing. So it's very easy to use, and it's kind of presented to you in a very frictionless, seamless, easy to accept way. The flip side to that, and I think where a lot of people might be having some issues with the utilization of buy now, pay later, is that some people feel like because it is so frictionless and easy to use, it can encourage overspending and can encourage people to maybe make purchases of a higher dollar amount than they necessarily can afford because they're not paying all of it upfront right away. There's no interest on a lot of these things, but there can be a lot of fees, a lot of really strict penalty structures that some people aren't always happy with. It's very easy to stack buy now, pay later loans because, again, if it's so easy, you can have a lot of them going on at once, which some people feel puts them in a position that feels like they're having to rebuild. And I think a lot of people also just have questions about how it's regulated and how it affects their credit and things like that. So Alok, if you could kind of take us from there as our industry expert on this, if you can talk the history of buy now, pay later, kind of how it started, what you've seen change and how it's growing over the, last few years, next couple years, and just kind of share your personal take on where buy now, pay later fits in the broader lending ecosystem, if you will.
Absolutely. I think you nail a lot of great points about how the industry has evolved. I think any new product goes through its journey of evolution, right? So has buy now, pay later. So from what I read, it has had an evolution of old school financial tools, right? So it used to be layaway.
Right.
Many, many years ago, you would pay first and have that item in the store until you pay it, and then you go pick it up. And then it moved to point of sale financing, where you would pay something like, they used to call it same as cash. I remember from my Capital One days, no interest payments, you just pay it and you have to just make sure that you pay off before the interest is due. But yeah, those big furniture store loans, and this term came buy now, pay later.
Yeah.
And with 2019 and during COVID times, and since then, it has multiplied almost 20 times since from 2019 to 25 in terms of usage, right? So estimated 70 billion annually today on the volume that goes through these plans.
Wow.
And much of that growth, as you rightly pointed out, has been because of that ease and convenience and speed and digital experience, which a lot of these fintechs do really, really good job of bringing it right in front of you, right? So use of these plans have really as well like expanded from apparels to and travel to now it is being like almost everywhere. Your healthcare, your dentist, you're going there, like you have pet care, even like high frequency essentials. You see that with DoorDash, like your gas and groceries. Yeah. So the usage is across industries. One, definitely we see that. And I'll say beyond that it is also across generations, age groups, across income bands. So almost everyone out there with that ease, convenience, and how the product is brought to you, we see usage. Now it's getting blended with traditional lending. What we're seeing now in the BNPL space is that there are post-purchase buy now, pay later plans from major banks and some credit unions where you buy something on your debit card or your credit card, now you have the option to split your payment to pay it back towards it. So overall, it fits this ecosystem of a cash flow smoother and is now an estimated mainstream payment product, the way we see it across industries being used. It's getting more available as a short-term micro loan. The offering is also getting deeply embedded in digital wallets like Apple or Google Pay. You go tap your phone, make a purchase, and this plan is available. One thing I'll also sort of call out is that as this product is evolving, the reporting into credit bureau with your plans and how you're repaying them, it's the loan end of the day. It's a short-term installment loan. So your payment activity is now getting captured and is available on standard credit reporting.
And correct me if I'm wrong, that didn't always used to be the case, correct? Like when buy now, pay later started, these companies were not reporting to credit bureaus your like repayment history on these short-term loans. Is that correct?
That's correct. Some of these credit models work based on how many loans you have taken out in the recent 6 months, 3 months. That really brings your credit down. And with these loans, typically you take out many loans in a given time frame. So they're being very careful about what data to send to bureaus, and bureaus are very careful about how to use that data to build into the scores. So it's taking some time, but it's getting there.
Which is understandable because, like we were talking about, people are using this for not only large purchases, but, their grocery bills or DoorDash or things like that. So if you are stacking these buy now, pay later loans and having a lot, if they're all reporting to your credit, that can theoretically have a very, very big impact on your credit score.
Yep. One thing I'll add, Andrew, is because why is BNPL so effective is because of this concept of mental accounting, right? So you have the human tendency to treat money differently based on its context.
Okay.
I'll give an example. When we see a $100 price tag, our brain flags that as a major loss or pain.
Right.
But when you see that same purchase framed into 4 payments of $25 each, spread over time, that mentally that bucket is a smaller, like safer daily expense to you. So it tricks your prehistoric brains into bypassing that natural sort of pain of paying that amount. So I love decoding these behaviors, and I'm just excited to help our listeners use that knowledge to their advantage.
Yeah, and I think going off of what you just said, Alok, that's probably where you see a lot of your members having issues with buy now, pay later, is that it's maybe a $100, $200 purchase that they ordinarily would not have made, but because they see it framed to them as like, oh, but it's only $30 per paycheck for the next whatever, now they feel like it's much more doable, when in actuality, like it's the same amount of money ultimately leaving your bank account either way. So Danielle, can you talk a little bit about what you hear from members that you're helping who have utilized buy now, pay later, if it's all negative experiences, if anyone's had good experiences with it, kind of what the member perspective has been just from where you've been sitting?
So it's basically, unfortunately, has been a lot of negative effects. So like I said, every now and then you'll find someone who understands it and like they just focus on the one thing that they have the plan working for. But then you have the others who, as he just brought up stacking, which is what I was going to talk about, is when you may have 2 with a firm and you have one over here with Klarna and then you have one with something else, right? So I actually did an example just so that our listeners can get a picture, a visual of what that looks like. So let's just say your mate calls you like, hey, babe, did you hear about the Bruno Mars concert coming up, right? And so you're like, you promised me that the next time he was here, we were going to be able to go, right? So then what do? You have to get on your phone, check out the ticket prices. So when you're looking at the tickets are like the cheapest is $5.49, right? And so you're like, but that's in the nosebleed section. So I don't want, if I'm taking If we're going, we're going, right? So then you do the $750, right? So then when you're looking at that, they give you the option for the paying for is right there. So you're like, paying for, I could do this. I could do this, right? So it's breaking it down. So that's, what is that? $187.50 every 2 weeks, right? But we want to focus, what you should be doing is also focus on my monthly. So let's say, when my mate called me and they were so excited about the concert coming, I know that we just did our budget last week, right? And I only have $400 available to play around and do whatever I need to do with. So you just spent $750, which is $375 for the month.
Yeah.
So now you only have $25 left out of that $400. So then, okay, I'm gonna sacrifice. We're gonna go ahead to this concert. I made a promise. Let's do it, right? So then next week, babe, what we gonna wear? We can't pull nothing out the closet, right? So we gotta represent. We gotta show up, right? So then, your babe is texting you what you should wear. This is what I think we should wear, right? And so then you're, okay, here we go. So now this is, okay, 200, I could work that. So that's what, 50? Okay, yeah, we could do that, right? Then moving on, concert date is here. I couldn't get off work, or you couldn't get off work early, so now you're rushing to the concert, right? So you change at work, throw your stuff in the car, then you're running to get into the concert. So concert, had an amazing time. You get out the concert, you're walking to your car. I'm getting closer. What's going on with my window? Then I get to my window's busted out. And then what else? My backpack with the laptop is gone, right?
Yeah.
So now I have a need.
Right.
I have to get my window fixed. I have to get my laptop fixed, or not fixed, get a replacement for a laptop. I have to have it for work. I can't make it without it, right? So now I've already gone over budget.
Yeah.
So now what am I going to do? So you're looking. You find something, the cheapest you find is $300 to get your window fixed.
Yeah.
And then, of course, they have the option to do paying for it. So you go ahead and do that. And then you're like, the reason I'm going to do that and not talk to my insurance is because my insurance deductible is $500. So if I've got it for $300, I'm not going to bug my insurance. And plus, it's going to make the insurance go up.
Yeah.
So then after that, now you're looking for the laptop. The cheapest you find, let's say it's $400. So now you're doing that. So you have all these payment plans. You started out within my budget, I had available $400. And now you're over budget by $425 because things are just happening, right? And you're not thinking about, I didn't put no money up for savings, right? I should have locked something up for savings. You're just going with the flow.
Yeah.
My babe on call and is like, listen, you promised, right? I came back out of the promise is what you're feeling, right?
Yeah.
And then totally unexpected, my car is broken into.
Yeah.
So usually when they are online or on their phone or whatever and they're seeing something they want, it causes you to get more impulse purchases because it's right there at your fingertips and it's saying you can do this now for $20, $25 versus when it was layaway. Layaway is, you can have it, but you're going to pay for it and then you can have it. So mindsets are totally different now. Like he mentioned, it's not just using it for the big purchases like airline tickets, vacations, and things like that. They're doing it with food, door dashing, a cup of coffee you should be paying out of pocket.
Right.
But they're breaking that up too because their mindset now is, we could just break it up. We could just spread it across, right? And then not looking at how that could harm you financially because all this that I just explained in the example happens, but guess what? Now you set me up in a situation, or now I set myself up in a position where my PG&E is coming out this month in the beginning of the month when that afterpay is supposed to be coming out too.
Yeah.
One is going to hit, and the one that doesn't is going to cause a fee. So I'm either going to get a fee because my payment for PG&E was returned, or I'm going to get a fee because the afterpay payment was missed, and now they're charging me a fee.
Yeah.
So it's like, yes, in the moment, I could get it because it's only $20. You're not thinking about $20 every 2 weeks.
No.
You're thinking monthly usually, even though it's telling you that's not where your mind is. So because of those that's why I call them traps. So because of that, you're sucked into that and you do it for this thing, that thing.
Sure.
And then
And also, like you were saying, I mean, the scenario that you laid out, there's a bunch of things people are in that situation doing buy now, pay later for. So you have an item that's $200, say, and you're like, oh no, I'll just pay $50 or $30 or whatever now. But if you get 5 more things that you're stacking that you're also buy now, pay later, and you're essentially paying that same dollar amount that you would have paid out of pocket, you're now just doing it every 2 weeks for the next, 8 weeks or whatever, because it's kind of, like you said, incentivized or kind of increased your impulsivity on spending. So I personally, I've used buy now, pay later maybe once or twice. I generally prefer to use my credit card just because I know I'm going to pay it off, not pay interest, and then I get points back. So like it works out for me. But I do think that there is a smart way to use buy now, pay later. Like if you can be diligent about your budgeting and make sure you actually have the money, like you said, allocated for your month, set aside to make these payments, it can be a good tool to not have that dollar amount, come out right away. It just, I think, requires a lot more intentionality and a lot more planning than it's often either advertised as or as people are giving it. So Danielle, if you could give a little bit of practical guidance or some tips on how you think someone could use something like this wisely.
Sure. So I'm always about budgeting. So if you look in your budget and you see, okay, we're going to take this vacation in 2 months or so, right? And so say you have the money saved up, but you're just not comfortable with that chunk coming out at one time.
Sure.
So the money's there. You just don't want it to come out in that one lump sum. So I set up the 4, paying 4, and then it's coming out, in increments, right? Another thing is just, again, going back to your budget. And if you have something that is a need, making sure that it fits, right? But if it's something that you can plan for it, right? So when it comes to even making decisions, say it's something you have to do, right? So let's say my microwave blew out. I have to get a microwave, right? I mean, you could go back to warming stuff up in the stove, but that takes too long these days, right? So I need to replace my microwave. You can still get the microwave, but how about you get the one for $100 versus $300, right?
Yeah.
The outfit, maybe I do need to get a new outfit. Maybe I'm going on an interview or something like that, right? So I need to get a new outfit, but let's spend $50 versus $150.
Right.
So making wise decisions when you are getting what you need, right? The need is the clothing. It's not name brand. It doesn't have to be name brand. So just taking a moment to step back and really pay attention to where my money is going. Because yes, I have this need come up if it's considered a need. And even sometimes your wants, like I did with the clothing. Clothing sometimes is a want, right?
Yeah.
But still, make a decision. Stop, take a breather. Like, do I really need to spend this much on that? Who cares what brand it is, right? So let me go the cheaper way. So still I'm working with my budget and staying within my plan, but still getting what I want right when I need it.
Sure.
Or want it.
Yeah, I think it's kind of like I tell people the same thing about credit cards. Like, you should not use credit cards as a way to borrow money because it's the highest interest rate out there. It's easy to get stuck in those traps. Like, credit cards, you should swipe if you have the money available to pay it off. There are many, many less expensive, less costly ways to borrow. And I think buy now, pay later should probably be treated the same way. Like, if you have the funds, like you said, available to where you can make those payments, you just don't want to lose it all right away, that's totally understandable. It just, I think, requires a little bit more planning and mindfulness, discipline. Yes, exactly. Alok, how about you? Do you have any practical guidance for how people can use buy now, pay later in a way that kind of maximizes the appeal or the benefits of it in a way that's a little bit more financially healthy, I guess?
Yeah, no, absolutely. I love what you said there. I think this idea of budgeting and knowing like how much you can spend, which product should you use, comes from more awareness about like what is the pricing on that product, what fee. This is a loan, right? So this is an installment loan. So if you miss a payment, well, at some point you'll get a late fee. If you keep missing, it's going to hurt your credit, just like any other product, right? So I do like the comparison with a credit card in some cases because in my years working at Capital One Wells Fargo, I saw that they offer a 0% APR balance transfer. It's an ultimate study in human behavior. Why I say that is because it's a tool. It's far from reality in the sense that it's a psychological test for you in the moment, right? So most people see that 0% for 12 months. Oh my God, your brain just stops reading after that, right? So you see that there's a transfer offer essentially they charge you a 3% or 5% fee up front. So it's like prepaid interest. You're paying that to get that 0% for 12 months. And they definitely ignored the 29% APR waiting for them at the end,
at
right?
The end
so
of it,
so that there's a reset trap which happens here. People move the debt. They feel a sense of relief, like they've solved a problem. And then they start spending on that original card again. So that didn't change the behavior. That just changed your goalpost. So why I say all that is because BNPL to me is a modern version of that 0% offer. It may feel like free money in the moment, but if you don't have the discipline, like you guys were discussing, right, to pay it off, or if you just justify buying things you can't afford, you're doing something wrong.
Right.
That you need to just stop, think about it, and then reflect on whether that's the right move or not.
Yeah.
Now, I'm not here to kind of scare you away from buy now, pay later. I spent 18 years sort of watching banking evolve, and I also think this is a great tool.
Yeah.
Right. So there's this. Remember, BNPL should be a convenience for you, right? It should not be a profit center for your bank.
Sure.
So if you're using it to smooth out your cash flow while your savings stay put, you're winning. If you're using it because you have no balance in your account and you're hoping for a miracle by like next Friday, the tool is now using you.
Sure.
Right? So my advice here would be to master the tool and don't let the tool master your paycheck.
I love that. I love what you said about how it should be something that's a convenience to you and not a profit center for your financial institution, because I feel the exact same way about credit cards. And we've drawn that conclusion a lot while we're talking about this today. Personally, I love credit cards. I put everything on my credit cards. I rack up those points. I used points to book my flight to Greece in a couple months. That was essentially free because of just my regular spending. But I know how they work. And so because of that, I'm able to maximize the benefits, that's going to help me out while not just blindly giving interest fees, whatever, to the financial institution who's servicing the card. Buy now, pay later is no different. If it's a tool that has, rewards and consequences just depending on, I think, how you use it. Right. So we've talked also, quick question, Alok, for companies like, because I don't remember how it worked, Affirm, Klarna, whatever, if I were to go through, a situation and do my buy now, pay later with them, how do I tangibly go about paying that money back? Like, do I have to make an account with those other third-party companies and link my financial institution? Like, who is actually collecting that money at that point, and how easy is it to make your payments?
Yeah, so within the digital app, the moment you select a plan, they sign you up for auto pay.
Okay.
You set up your auto pay using a debit card, the bank where you bank, right? Or you provide their checking account details so they can debit that amount, right, when that payment comes through.
Right.
The key thing here is, like, I know it's Affirm, it's Klarna, it's PayPal now, like Sezzle, so many out there.
Now. Credit cards have those.
Have the option now, yeah.
Well.
Right, and none of these financial institutions want you to miss a payment, right? So I mean, yes, you give them a $5 fee, but then they are not giving that plan for you to like fail, and then that's how where they make it, right? They want you to pay back with interest, right? So that's when they make the most money. They don't make the most money by when you miss a payment. So try to stick to like one or two that you're working with. Like, a firm cannot see what a Klarna gave you.
I understand.
Klarna does not know what a Sezzle or a PayPal or your bank gave you, because in many cases, as I said, it's not reported. It's getting to a point where it comes to your credit bureau. But then until that happens, they know what plans you have with them. And if they made a bad decision to give you that plan, then they'll stop it and you won't see those offers anymore. So try to stick to that one. And I know there's a lot of AI and machine learning going on these days that they can be very sure of how many plans can you afford with an understanding of your cash flows. So things are getting more sophisticated on the learning side of it.
Yeah.
So there's somebody there to watch out for like whether you can pay that back or not, because they don't want to lose their money.
Yeah.
But again, it's a loan. I say that it's a discipline, and you need to know your finances better than anybody else. So spend the time to do that.
For sure. It's wild, Danielle, that you said that credit cards are now doing buy now, pay later options, because credit cards already are buy now, pay later. And so to like stack an additional level of like lending on top of that is just...
Because you have the 0% option.
Yeah.
So they tell you which transactions qualify for that. And then, it tells you how much that will be broken down to every 2 weeks. So it's just like the buy now, pay later, but it's within your credit card. So where you have your regular minimum payment, now whatever payment option you went with, say it was another $100, right? So now it's whatever that minimum payment was plus that $100 that you have to pay.
Whew. Man, oh man. All right. So we're talking about how credit cards are now factoring this in. Alok, you mentioned how buy now, pay later is becoming a little bit more sophisticated. Can you talk a little bit more about the future of buy now, pay later, how it is starting to like integrate with traditional financial institutions and where you see it going, down the line?
Absolutely. So when I think of buy now, pay later and the need out there, right, and why consumers are using it, they are largely looking for payment flexibility.
Sure.
That's the key, right? So they're looking for that flexibility. And now, as you rightly call out, like major banks and credit unions are moving towards providing that through established forms of payment.
Mm-hmm.
Credit card, debit card, both of those you could see like now post-purchase, buy now, pay later, like you've already bought, but post-purchase, pay later plans, right? So that gives you that payment flexibility over time. One of the good things about this is that these cards are also regulated by Reg E and Reg Z that protect the consumer from unauthorized transfers and provide them a right to dispute certain transactions.
Okay.
So whenever you access a pay later plan through a credit card or a debit card, know that you have those protections.
That's nice.
Specifically with those products. Now, these major banks and credit unions are also learning from your cash flow data, and they're developing these machine learning models. They're doing the same work, right? And upfront, they'll provide you amounts to go spend and pay later in one of these BNPL plans. So banks are coming in and saying, hey, post-purchase on a card, you can have an installment loan to really have that payment flexibility.
Yeah.
Or based on our understanding of your banking with us, we will give you some sort of a spending power that you have this pre-purchase, $2,000, go spend wherever you want.
Okay.
But then that will get converted into a pay later plan.
Okay.
So one, in terms of that future, I expect that distinction between an Affirm, Klarna, PayPal, or and with the bank or a credit union offering you that same offering, that will start to blur a little bit for the consumers. That's one. Two, as I've already said, like credit scores will start to reflect your on time and delayed payments, both, right, onto all kinds of BNPL plans, which is good if you stay disciplined, as in many of these microloans can help you build credit for larger purchases like an auto loan or a personal loan downstream.
Good. Yeah.
So it's extremely important to keep that discipline and stay on top of your payments. So the future of BNPL, I'll summarize in 2 words, Andrew. One for me is transparency, and second is convergence.
Okay.
So expect BNPL to be fully baked into your digital wallets, your Apple Pay, your Google Pay, Samsung Pay. It wouldn't be a separate app, in my opinion. It'll just become a choice that you make every time you tap your phone.
Got it.
To pay. So buy now, pay later in the future will become that feature of banking and not just a standalone industry.
It's not going anywhere is what you're saying.
It's here.
It's here to stay.
It's here.
Transparency as the future of buy now, pay later, I think, is something that the members can probably benefit from quite a bit. Danielle, what are you hoping to see in the future with buy now, pay later as far as transparency or anything else that you think would be a little bit more advantageous to your members' financial well-being?
Kind of what he just touched on. So if they were able to see in their hand, like how many buy now, pay laters they have going on at one time and look at when the payments are due just right there on the spot in their hand, that would help them plan better. Because if you see that I already started one, if we look at the stacking again, if we see that we already started one last week, and remember it's every 2 weeks normally is when the payment has to come out, and it does come out automatically. But then next week you purchase something else, so now it's starting that week. So you're thinking, oh, I get paid every 2 weeks, so when it's time for the payment to come out, I'm getting paid as well, so the money will be there. But if you started one this week and you don't get paid until the following week, and you also started one that week, remember, you're going to have a period where no paycheck is coming in.
Yeah.
So that's when you start seeing the defaults. That's when you start seeing things bouncing and being returned because you didn't plan correctly. So if you can see it in your hand right on the spot, I think that would really help with
also probably
making.
Curbs impulsivity as well, because I think just having visibility into your spending habits and being more mindful of how you're spending does, for me at least, just help me slow down a little bit, because like you were saying earlier, it's very easy to just blindly tap yes. But when you actually see the numbers, it for me at least forces me to take pause. All right. Well, before we wrap up today, I have my final question for each of you, and that is, what is your golden nugget of today's podcast episode? And that can be something that we haven't touched on that you want to, say. It can be if you want to drive a point home, whatever you want your overall kind of final punctuation underline for this podcast episode to be. Your final words. Danielle, we will start with you.
So again, if it's not a need, plan for it. right? If it's not a need, plan for it. And if it is a need, right? Again, do I need it in this moment, or can I wait a month? Can I wait a few weeks, right? Can I save up for it? So definitely stop and pause. So just like how I know on one of the last podcasts I said, when you're out shopping, you want to make sure before you get to the cash register, you're stopping, you're pausing, you're looking at what's in your basket. Do I really need this? Can I throw this out and come back another time for it, right? Same thing. With the buy now, pay later, you don't really have that moment. So you have to force yourself to do it. So you have to really just gain the discipline, set up guardrails for yourself. They're not setting them up for you, right? Yep. So if there's an app that you go on to, whether it's Amazon, I know that's the huge thing, right? It could be anything that is your device, right? So take it off your phone. Take the app off, right? So put some guardrails that will work for you so that you don't fall into those impulse buys is what I would say.
For sure.
And then remember, don't compare yourself. So a lot of times we do things because we want to stay, what they say, with the Joneses, right? I need to stick with the Joneses or catch up to them, whatever the case may be. Purchase and do things within your financial means, right? Live within your means. So not theirs over there, because you don't know what they're doing. They're probably racking up credit cards and doing all that, right? But you're trying to, do what they're doing. And, that looks and that, look at that car and no, you don't even know what they did to get it, right? So no, focus on your budget. Have a budget, right? You first have to have one. Focus on your budget, and then, like I said, spend within your means.
The comparison thing is great. I always compare it to two icebergs, because it's like if you are your own iceberg, you know the entire scope of how deep it goes, all that. Everyone else, all you see is what is being shown above sea level. You don't know what's going on underneath the surface. Exactly. So there's no use in comparing your whole situation to just what you see from someone else's, because it's not the same. It's apples and oranges. So I like that very much. Alok, final words from you. What do you got?
It's such an important topic you just sort of mentioned there, Danielle. I mean, you're doing small talks and big change. This is a reminder, right, that you're reminded of simple things that you often overlook. Like, do you have, so definitely treat buy now, pay later as a debit transaction, not credit. And one thing that I'll add is try not to have more than one or two buy now, pay later plans at any given time. It'll keep your mental accounting clean, and it'll keep your paycheck with you.
For sure. And I think the transparency that you were talking about would probably help with that quite a bit, because if they're all visible, you can track how many you have going, and like you said, set guardrails for yourself, which is going to be very helpful. Alok, Danielle, thank you both so much for talking about this today. I learned quite a bit as well, so I'm very glad that you guys made the time to come and join me in the podcast studio.
Thank you again for having us. Thank you so much.
Thanks, Andrew. Love being here.
Glad to have you. And thank you all for listening. That is going to do it for today on Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. We will see you next time. Patelco Credit Union is insured by NCUA. Hey, you guys, hope you liked that video. Thank you for watching. For more financial wellness information, go ahead and click here to subscribe and here to watch the next video. Thank you.